Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Mike van Dulken, who is Head of Research at Accendo Markets. And this is the last of 3 videos that we're kindly doing today. We're looking at gold. Now, gold has really kind of broken out this morning again. What's the story? I think investors will know the story, but just explain to us what that means from a technical point of view.
Well, I've had to zoom out on this chart just so we can appreciate the highs that we're trading at, as well as where we could go to. A shorter term chart, so something like a 4-hourly, would actually show that gold completed what we call a bullish flag pattern around 1340, and it did that from the middle of last week. We're down at 1300, not far. Gold's benefiting on geopolitical uncertainty, safe haven seeking, following the North Korean nuclear test over the weekend. So risk aversion has seen investors run away from risk appetite shares such as equities and not so much base metal commodities, which puts us in an interesting situation. And we've seen the likes of gold, the yen and bonds benefit, which is the usual course of events. However, while the yen has benefited, the dollar's come back a bit, which has actually served to benefit, as I said, the base metal commodities, which would often move counter to gold. So the likes of copper, zinc, nickel, they're all still flying, potentially on the back of last week's positive China data as well. So a peculiar situation of events, but because these base metal miners are still doing okay, it's actually helping the FTSE and their miners, which would often struggle from when the likes of the safe haven metals are doing well, the base should be doing the opposing. So hence the FTSE holding up rather well. So for the moment with gold, any further North Korean shenanigans or indeed extreme dollar weakness could lead to a gold breakout at 1340, which could see us run up to 12-month highs. We're currently trading 10-month highs. We could add a few months to that and go back to last July. Then again, if all proves calm and investors say nothing to worry about, gold could easily come off those highs and start retracing back to 1300 quite easily. So with gold, often it's pure safe haven. At the moment it's safe haven and FX driven. And I think as we said off air earlier, investors seem to have developed an incredibly thick skin. We're facing geopolitical uncertainty of the highest order, I'd say, and yet markets are still doing, it's a wobble. I won't say it's a panic. Markets are holding up rather well.
I mean, we've seen on recent charts that when we see wobbles, there are buyers coming in. So a lot of people are sticking with their equity holdings because potentially, bond yields so low, that's the only place you can get value.
Indeed.
However, it does feel now with gold, people are starting maybe to move from cash into gold to have that insurance policy in their portfolio, and that's partly why we're probably seeing a rise in this gold.
Yeah, I mean, I don't think we can say gold has been on the up because people are wanting to hedge inflation, because it's decidedly lacking or enough to trigger any central bank moves anyway. It really has been on the safe haven demand, hence the rebound since early July, which is when Kim Jong-un started messing about, really.
Understood. Well, we'll see what next week or this weekend brings, and we look forward to having you back on the show.
Thank you very much.
Very soon, Mike. Thank you very much.